I'm absolutely fascinated about the distinctions you see in demand right now. What do you see?
Now, demand right now is trying to gradually recover. But the main uncertainty is the pandemic. Are we going to see a second wave of COVID or not will determine also the demand prospects this year. But when we look at beyond this, if the economy rebounds, as IMF and the others say, next year, we may well see global oil demand to come back to pre-crisis levels in a few years of time. And as such, I would say that we do not subscribe to those who say that the peak oil demand is behind us. It can only happen if the governments put strong structural policy changes in terms of electric cars, in terms of petrochemical industry and others. In the absence of major policy changes of the governments, with the rebound of the economy, I think we will go back to the pre-crisis levels in a few years of time.
In your wonderful outlook, you have a number of scenarios that you lay out, and anybody can understand, given the pandemic and the massive global uncertainty, I can really understand 2, 3, even 4 scenarios. In those scenarios, what is the variability for OPEC and the extended OPEC family?
So why do we come up with scenarios? Because the uncertainties are huge. We have never seen so many uncertainties, and one of them is critical. When we look at the oil markets today, in the past we were discussing about oil markets, refinery margins, investment, supply, demand, OPEC plus, IEM minus. Now the major determining factor is today coronavirus, how long it is going to be with us. If we see that the coronavirus is under control as of next year, for example, and the economy rebounds, we will see that the oil demand will come back to the 100 million barrels per day, and as such, it will give a space for the OPEC Plus and the other producing countries. But right. Important message coming from our outlook is sooner or later, oil-producing countries need to diversify their economies because the value of oil is going down with the price expectations and the demand expectations. It is the highest time for them to diversify their economies.
Fatih, can you talk to us about Libya specifically and the fact that they could actually go back to production? Is this the worst possible time for the market, and what does it concretely mean for the price of oil?
Yeah. I think Libya increasing its production will put additional barrels and will be another factor which can pushes the prices down. I think 2 important elements now in the very short term. What will happen with Libya? Production will increase or not, and how much it will increase. And the second one is what about the coronavirus? It is going to be under control so that the economies can start to recover, so that it can give a boost to oil demand growth. On the supply side and on the demand side, 2 uncertainties here.
All right, OPEC Plus is meeting soon. What will they decide?
It is, of course, up to OPEC countries to decide what they want. But what I see is that the recovery of the oil demand may not be as quickly as we or the others thought a few months ago, mainly because of the governments around the world not being able to have the coronavirus issue under control. As such, economic recovery may be delayed for some time, which means that the oil demand growth may be rebound, may be slower than one hopes to see.
Fatih, this is a really important conversation. Indeed, I would suggest this is a historic conversation in that your note on sustainable energy really leading off your outlook today really is a clarion call for the hydrocarbon nations. Do you actually see an appetite by them to make this grand century-long shift?
I do see, compared to a few years ago, I do see there are serious intentions to diversify their economies. Look at Saudi Arabia. Saudi Arabia had a Saudi 2030 strategy which aimed to diversify its economies. Iraq, just the other day I talked with the Iraqi Prime Minister. He said as soon as we address this issue, what they have in front of them, political stability and the pandemic, they are going to diversify their economies. But now, whether or not they have the financial means, those countries, to do this. Because as we all know, we saw this movie before, that they want to diversify, and it didn't happen. But what I'm seeing is there are two big pressures. One, demand for oil is weaker than before. Price of oil is weaker than before. This is the revenues are weaker. And the second one is many countries around the world are putting climate-driven, environment-driven energy policies in place, which will further put downward pressure on the oil demand. So they have to prepare themselves before it is too late, which means they have to diversify their economies beyond oil. And as most of those countries' economies are almost one-to-one indexed to oil prices. And it is very risky and, in my view, dangerous.
Fatih, what can you tell us about the U.S. elections' impact on energy supply? What does a Democratic win actually mean for energy and oil producers?
I think when I look at the programs of both of the candidates in the United States, they have different energy and climate policies. But if as you mentioned, Democratic candidate wins, it may have several implications, but two of them, I can say, looking at their program, they will be willingly to push the clean energy transitions even stronger. And the second, for example, if there was a discussion on lifting the sanctions on Iran, which may mean additional barrels to coming to market, and which can again be an important factor for the oil markets. So these are two possible theoretical developments if such a political result comes out from U.S. elections.